$284 billion in deals. That translates into a 22.5% market share, according to data compiled by Bloomberg. Shares of JP Morgan up more than 2%, Goldman Sachs stock up more than 3%. The 5 creators that filed a lawsuit against Montana for banning TikTok had more help than the platform's blessing. Bloomberg's Gina Cervetti reports.
Steve, what appeared to be a grassroots effort was actually a well-funded one by TikTok itself. The company confirmed bankrolling the lawsuit after dodging questions about its involvement for weeks. TikTok came clean after 2 of the plaintiffs told the New York Times about the funding, but they also said TikTok is not paying them directly. A company spokesperson says creators have expressed concern about the potential impact of the Montana law on their livelihoods, and the platform supports their constitutional rights. Steve?
Thanks, Gina. Apple digs in its digital heels for a showdown with European Union antitrust regulators. The company insists it doesn't need to make any more changes to its App Store after getting hit with formal charges of its treatment of music streaming rivals such as Spotify. The iPhone maker insists the EU wrongfully accused it of illegal curbs on the likes of Spotify that prevent developers from steering users away from the App Store. And those are the company stories we're following this hour. I'm Steve Rappaport. This is Bloomberg. Stay tuned for more Bloomberg Markets coming up right after this.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do have U.S. stocks trading mixed right now. We have got the Dow, the S&P. They are both higher right now. Actually, NASDAQ has turned around since our last update. We've got NASDAQ up 13 right now, up by about 0.1%. S&P 500 index higher by 12. That is a gain of about 0.3%. And the Dow Jones Industrial Average, it is advancing now by 192 points. For the Dow, that is a gain of just about 0.6%. Among the day's economic data, weekly jobless claims dropped the most since 2021. And with more on that story, here's Bloomberg's Vinny Del Giudice.
Jobless claims dropped by a hefty 26,000 to 239,000, reversing a recent trend. Last week's decline, the most since October 2021, may have been exaggerated by a federal holiday delaying some processing. Even so, demand for workers has been easing as Federal Reserve interest rate hikes aimed at stemming inflation chip away. Finito El Giudice, Bloomberg Radio.
We've got bond yields surging as traders boost their Fed hike wagers. The 10-year, 3.82%, with a 2-year, 4.85%. Spot gold is at $19.10 the ounce, up $3.50 right now, higher by 0.2%. West Texas Intermediate crude down 0.6%, down 0.9%, 68.96 a barrel. So again, recapping, U.S. stocks are higher across the board. S&P up 12, a gain there of 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie. Jess Minton, Paul Sweeney here in the Interactive Brokers studio. And I'm excited because our next guest, Paul, is in studio with us, speaking with Robert Teeter, Head of Investment Policy and Strategy at Silvercrest Asset Management. And I know, Robert, you've been focusing a lot, obviously, on what's been happening with the central bank speak this week, but also the headwinds that rates have been facing on some of this commentary. What's your take from what we heard from these major, when you're thinking about Powell to Christine Lagarde?
Yes, I think while we got the pause in rates that folks were looking for, we've had a lot of pushback from the Fed in terms of hawkish commentary, and some of that came through in the past couple of days. And for me, it raises the question again of is the Fed targeting inflation or are they targeting the economy? And so I think they've moved back into that mode of perhaps talking about targeting the economy a little bit and wanting to see some slowdown there before they ease up.
We got some good economic data today. I mean, the economy's in pretty good shape. If I'm the Federal Reserve, I can talk tough here like I have been talking tough.
Yes, I think that's spot on, and that's the way I've been interpreting it as well. They've had a license to talk tough, if you will. They've been able to do that. They haven't caused a problem in the economy, and the tug of war continues. You know, inflation's been falling quite a bit, but the Fed's been able to keep up these increases in hawkish talk and put the pressure on killing inflation for the long term.
Has the Federal Reserve and Jerome Powell not gotten enough credit for what they've been able to engineer over the past year? Especially, obviously, CPI isn't the Fed's preferred gauge, but when you think of June of last year, CPI at 9.1%, now you're looking at what would be around 4% for that, and obviously the trajectory of the stock market since last October.
I think that's a very fair point. I think because the Fed got off to a bit of a rocky start with the rate hike cycle, a lot of folks knocked them down a bit in terms of credibility, but they've built that up a lot. And in my opinion, the Fed's earned a lot of credibility here with inflation coming down a lot for a lot of the reasons that they've mentioned, as well as remaining tough and resolute in their fight on inflation. And so they've been able to do that without killing the economy. I think they deserve a lot of credit for that. I also think it builds in a lot of flexibility for the Fed because the economy is okay and because inflation has come down pretty clearly. Should they need to, they do have the flexibility to pause for an extended time or even cut if that need emerges.
Earnings. I think earnings still matter. I'm part of the old school here. I know it's not just the Fed here. We're going to have earnings kicking off in a couple of weeks here. A couple of questions there. One, what are you looking for? And two, how much earnings risk, if any, is there still in this market, do you think?
So I'm looking forward to earnings because I think it may give us a little bit of a tailwind here. We've seen earnings estimates stabilize, tick up even just a little bit because we've had the economy coming in stronger than expected. The data today shows that as well. The revenue side of the equation for companies is probably a bit better than had been forecast in those expectations. And on the same time, you have an environment where cost controls have been implemented. So companies have been fearful of recession for a while and have been very cautious on the cost side. So I don't want to say I'm overly optimistic on earnings season, but I do think it could give us a bit of a boost, and I'm looking forward to it.
I was speaking with Marion Bartels, who's the chief investment strategist over at Sanctuary Wealth, and she was talking about how typically when CEOs start getting very loud about their concerns, that's when it should raise some alarm bells. It seems like so far, when you're thinking kind of on a company by company basis, on aggregate, it doesn't seem like we're at that point yet. So would that be more of an optimistic sign going into this earnings season? Obviously, how that ties into the trajectory of the economy.
Yeah, it's a good observation. We've certainly had these rolling fears of recession for some time. So dating back to the beginning of last year when we had slightly negative economic growth for 2 quarters. So people have been preparing for this recession for quite a while, and it hasn't been there. And so I just keep looking to the underlying data, both real time and estimates on the economy, and it shows to me that we still have slightly positive economic growth. So I think that bodes well for the revenue side on earnings.
And also the consumer, obviously being more than 2/3 2/3 of GDP. We saw those upward revisions being partly not just exports, but also by the consumer. So when you're thinking about different sectors, when we're looking at an earnings perspective, especially just Bloomberg Intelligence marking up those results when we're looking at discretionary, which obviously a lot of pressure it was under last year, as well as some aspects of staples, not necessarily packaged good companies. Obviously, General Mills was warning on this. But what's kind of your thought as far as some of these more consumer-oriented type companies when you are having some of them like General Mills saying, we don't think we can continue to pass on these costs to consumers right now?
Right. It's a super interesting environment there. And one of the things that I've been optimistic on has been on the theme of following the consumer and following the revenue. And so from a sector basis, I do think most parts of consumer look pretty encouraging here. Similarly, in industrials, I think you have some strength from reshoring and manufacturing build that's been going on. And there's certainly a technology upgrade cycle. So you put those three sectors together, and they all have some tailwinds in terms of revenue opportunity. I do think the interesting dynamic with companies has been at a company level how they're managing through those situations. So we had people fearful of inflation causing profit margin collapse. We now have people fearful of inflation coming down, causing profit margin collapse. But companies, by and large, have been very dynamic in their responses and done a great job in terms of managing through a really rapidly changing cycle in terms of both prices and their inputs. So I think I'm pretty optimistic in terms of how margins hold together here. Companies have done a pretty good job.
So with Silvercrest Asset Management, I think you guys focus in part on global manager sourcing. What do you look for in managers these days?
Yes. So that's a fun question that I could ramble on for a long time, but I'll give you the concise answer. So thematically, we look for three things when we're looking for an investment manager. One is more concentrated positions than normal. One is a longer term holding period than normal, and one is avoiding going from worst to first. And our research shows that those three attributes really lend themselves well to quality stock selection with a bias towards fundamentals. That tends to work over time. We tend to find managers outperform when they do those three things.
Are there any specific stocks you can talk about that you're buying or selling, or maybe on an industry level?
Yeah, so I don't comment on a stock level, but from a sector basis, I am pretty intrigued and optimistic from the earnings backdrop for consumer discretionary, as you alluded to, perhaps some parts of staples, as well as industrials and technology.
When it comes to discretionary, because there's so many different sub-industries, if you're thinking about home builders, automakers, EVs, obviously retailers, is there a particular group within discretionary that stands out to you?
Yeah, one of the things that I've found the most compelling is the areas that have still been seeing pent-up demand. So when you look at some of the spots like in leisure and airlines and hotels and hospitality and things, that still continues to be going strong. And you see it in the data and you see it anecdotally. You know, anytime anyone gets out and travels these days, things are pretty crowded and pretty busy. But we also see that in the data. So if you look at mobility data, if you look at where people are spending money, more people employed in the country than have ever been before, and they're happy to be out and about doing things. And to me, that leads to those segments within discretionary.
So do you think people have just been too gloom and doom? Coming into this year, obviously, but now 6 months into this year, heading into the second half, do we need to maybe rethink those sort of recessionary projections that almost seems very well telegraphed for so many people?
Yes, I do think that's a large part of it. I think one of the dynamics that happened was we had such a strong boom-bust cycle that when the momentum on the economy started slowing down, that instantly triggered a lot of indicators for future upcoming recession. While at the same time, if you looked at what was actually going on in terms of data and employment, the stability was there. So my take all along had been that economic momentum has been and continues to slow, but slowing back down to a low positive rate of growth rather than dropping at the pace that it had been coming off of that really high momentum out of the boom-bust cycle.
You know, we've had this kind of magnificent seven, if you will, stocks kind of leading the way. Is it worth trying to go out there and look for value stocks, God forbid?
I do think that there's some value in value, although in my opinion, it's more of a sector exercise than a value versus growth exercise. Okay. And part of that is because of how companies are managing through different cycles. But I do think there's some value in small cap here. That's an area where there's a lot of underperformers, but there are some great companies that have been underappreciated. We saw breadth improving a little bit after the debt ceiling. That was one of the things that we looked to was would breadth improve after that, and it did. And so that's a bit encouraging as well that you might have some money flowing back into that space.
In small caps, obviously, being the ones we're under pressure, but they typically lead the way before large caps. So I feel like that's obviously going to be a key area of the market to keep an eye on. We only have about 20 seconds left, but what's the top question you hear from your clients right now?
That is a great question. I think it still comes back to the Fed cycle and inflation. That is still very much number one on top of people's minds.
That's good to know. I mean, not surprisingly, right, Paul, when
Right.
it comes to
Yep.
this. And then we will have that Fed meeting coming up at the end of July on the 25th and 26th with
Right.
that decision. So all eyes will be focused on that. Jobs Day next Friday.
Yep.
Average hourly earnings will be greatly in focus. And then the week after that, we'll get another update on July 12th when it comes to CPI. So Robert Teeter, thank you so much for joining us, Head of Investment Policy and Strategy Group at Silvercrest Asset Management, and taking a look and a little check here on the markets. S&P 500 up marginally, as well as the NASDAQ 100. This is Bloomberg. Now let's go down to Washington, D.C. to get some world and national news with Bloomberg's Nathan Hager.
Some galactic news to start, Jess. We have our eyes on the skies with Virgin Galactic, the company founded by billionaire Richard Branson, kicking off its first paid commercial space flight. A crew of Italian Air Force officers and an engineer with the National Research Council of Italy are aboard this mission known as Galactic 01. It began just about an hour ago. We have had liftoff from the Spaceport America facility in New Mexico, and Galactic 1 is now above Earth's atmosphere, the latest example of commercial spaceflight. Colleges across the country may have to put their admissions policies through a drastic revamp. The Supreme Court has rejected race as a factor in a 6-3 decision against Harvard College and the University of North Carolina. Bloomberg's Anne-Marie Horton reports Chief Justice John Roberts wrote the majority opinion.
He said both programs lack sufficiently focused and measurable objectives warranting the use of race unavoidably. Employing race in a negative manner involve racial stereotyping and lack meaningful endpoints. We have never permitted admissions programs to work in that way, and we will not do so today.
Bloomberg's Anne-Marie Horton in Washington, where the White House says President Biden will address the Supreme Court ruling at 12:30 Wall Street time. We will bring you those comments live here on Bloomberg Radio. They are bracing for another night of violence in France. Protesters set fire to the town hall in Nanterre last night. That is the Paris suburb where police shot and killed a 17-year-old during a traffic stop on Tuesday. Today, the French government is mobilizing 40,000 officers across the country, including 5,000 in Paris, after the unrest spread beyond the French capital. More than 180 people were arrested. Global news, 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nathan Hager. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long at Bloomberg with the Dow, the S&P, NASDAQ all in the green right now. A 222-point jump for the Dow Jones Industrial Average, up by about 0.7%. S&P 500 index at 4392, up 15 right now. That is a gain of 0.3%. And we've got the NASDAQ Composite Index up 14 points at 13,606, a gain right now of just about 0.1%. Russell 2000 outperforming, up by 1%, higher by 19 points. 10-year yield 3.83% with a 2-year at 4.86%. Gold 1909 the ounce, up 0.1%, and West Texas Intermediate crude down 0.7%, 69.13 a barrel. Wall Street got more signs. The Fed's war against inflation is not breaking the economy, or at least not yet, with traders sending Treasury yields soaring amid bets on further rate increases. As for that economic outlook, Margie Patel is Senior Portfolio Manager at Allspring Global Investments.
In this whole cycle, there was nothing wrong with the economy, no real excesses. So the economy is pretty robust. And when you look at the equity market, you could see that industrials, transport, consumer discretionary are really some of the sectors that are leading. That says to me the market doesn't think the economy is about ready to roll over into a recession anytime soon.
15 years later than planned, Richard Branson's vision for space tourism has become a reality. Virgin Galactic Holdings began commercial operations today when it sent 6 people to the edge of space and back. Shares of Virgin Galactic, though, they are down now by 8.5%. Recapping, we've got a 10-year yielding 3.84%, the 2-year 4.86%. Stocks higher right now. S&P up 16, up by 0.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pelleton, thank you so much. We appreciate it. For those who care at home, Apple is at an all-time high again at $189, and it's called 85 cents. It's about a dollar per share away from $3 trillion. How about that? Put up a max chart of that bad boy, and it's just been an extraordinary ride, really, since kind of right around 2010. It's just had a rocket ship. So it's pretty cool there to notice that.
Yeah, that magic number would be 190.73 there.
Very good. That's perfect. So we're getting there, and the stock's up a smidge here today. Barry Ritholtz joins us. He's seen a thing or two. He's a host of Masters in Business for Bloomberg Radio. He's Chairman and Chief Investment Officer at Ritholtz Wealth Management. Barry, I like your blog out today. It really got me thinking, and it kind of goes back just to the absolute basics of investing is what information. We're all bombarded with information. We've got our Bloomberg terminals in front of us. You take all that data and you have to figure out what is embedded, what's already reflected in the price of a security, and what's not. How should we think about that?
Yeah, there's a lot of different ways to look at what I like to call information hygiene, the source you're relying on, the track record of the speaker. I cringe every time I hear anybody ask a fund manager, a strategist, an economist, so where's this stock, this sector, this market going to be in a year from now? Without the context of their track record, it's hard to really have a sense of how to evaluate that. But even more important is how much of this is already out there, is already public news. This is the classic foible that trips up new investors. They'll read something and think, oh, I got to go buy this company, not understanding that if it's in the public sphere, if it's in the news, if it's been a release from the company already, the odds are it's probably already reflected in the price.
And also taking a look at visually here, over the last decade, big tech names obviously dominating the index here. And so this continued argument, because this isn't the first time, right? We've had these debates over narrow breadth and technology leading the charge. I mean, this was going on even well before the pandemic, when you think back to 2015, 2016, 2017. So, I mean, what is your take on this when people want to keep pushing back on big tech, and especially a component that clearly brought the market back to record highs when we were in the midst of the pandemic?
And just stop and think about why that sector brought the entire market back from the depths of the lows in call it March 2020. Hey, everybody's working from home. Everybody needs technology. We're going to use Microsoft Office. We're going to use Zoom. We're going to use all these tools, some of which have staying power, as we've seen with Apple, and some of which kind of fell out of bed. You know, when you see things like Peloton and Carvana and things that were clearly temporary ways of dealing with the fact that we're all locked down, those stocks ran up and then they ran down in anticipation of reopening. That's a very different experience than pulling forward by a few years the sort of technology that everybody needs and all households and businesses are using and are going to continue to use in the foreseeable future. I'm not a big fan of the criticism of, oh, these big influential companies with enormous revenues and incredible profits, they're too big a piece of the market. Well, you have to ask yourself, why? Why is Apple the biggest company in the world? Why has Google done as well as it has? Why did Facebook double this year? And when you look at the revenue growth, when you look at the profitability in these companies, of course they're an outsized part of the market. Who matches Apple for both volume and profitability? It's like merging Ferrari and Toyota. Very hard to do, and they've done it really well.
Barry, this was also a week where we had a lot of central bank speak, if you will. There was obviously a group of the ECB hosted some central bankers in Portugal this week, and I guess with the exception of the Bank of Japan president, who doesn't really have an inflation problem, everybody else continues to talk a tough talk here as it relates to interest rates. You know, what should the market do here?
So for most of the past year, the market was ahead of the Fed in saying inflation peaked a year ago in June. Goods inflation has come down dramatically, and pretty much wherever you look, lumber, natural gas, foodstuffs, there are a handful of pockets of problems. Remember the issue we had with the spike in price in eggs? That wasn't inflation. That was an avian flu that saw millions of hens had to be put down. But for the most part, goods have come back down dramatically. What hasn't really come down, or at least the rate of increase has slowed, but not as much as the goods side, are the things where we have legitimate shortages, some of which are related to the pandemic and some of which have just been structural. In the United States, there is a shortage of single-family homes following the financial crisis, which, by the way, was preceded by 5 years of overbuilding single-family homes. Builders pivoted to multifamily and apartments, and depending on which talking point you want to pay attention to, we have anywhere from 2 million, 3 million to as many as 5 million homes, a shortfall of, given how the population has grown, how lots and lots of people who, especially recent college grads who were, the joke was living in their parents' basement. Well, guess what happened? They grew up, they made some more money, they formed new households, they've gotten married and moved in together, and they want to own their own house. And so now there's this massive shortfall. I don't know what the Fed can do about that. There's nothing they could do about the shortfall in used cars because we had 3 years of underproduction of automobiles because of a shortfall in semiconductors, and then wages. There's a huge shortfall of labor in the United States. Higher rates isn't going to do anything about that. So the services side, rent and labor, seems to be the biggest problem that at least the U.S. central bank has. I just think they're closer to the end of their rate hiking cycle than the beginning. And, you know, if I was Jerome Powell, I'd put the victory flag in the ground and say, we won, and head off for the rest of the summer and relax at the beach. I don't see a whole lot more to be gained by higher rates now that we've gotten off zero, caught up with inflation, normalized rates. 5% is a fairly normal Fed funds rate. At this point, the risk reward of, hey, we're going to cause more damage versus fighting, what inflation are you fighting now?
Right.
It's hard to see.
Well, Barry, it's always great having you here. Barry Ritholtz, host of Masters in Business for Bloomberg Radio, joining us to walk us through this. And I think I'm going to keep a close eye on Paul when he's talking about housing as well as home builder stocks, which have been on a tear this year. We'll have more coming up. This is Bloomberg. Let's get some company news with Bloomberg's Steve Rappaport.
Hello. Apple shares are slightly higher as the iPhone maker is eyeing a $3 trillion valuation. And while the company looks to make history, Apple is pushing back on charges from European regulators, alleging it imposed illegal curbs on rivals like Spotify that prevent developers from steering users away from the App Store. Apple insists it already addressed competition concerns and argues no further changes are necessary. Sticking to the world of tech, two tech giants had their day in court to defend the biggest ever video gaming deal. More on that from Bloomberg's Lisa Mateo.
As part of his testimony, Microsoft CEO Satya Nadella reinforced his promise that Activision Blizzard's Call of Duty will 100% remain on Sony's PlayStation. Meanwhile, Activision Blizzard CEO Bobby Kotick says a pause on the agreement would likely kill it. Both chiefs testified in San Francisco federal court to defend their $69 billion deal that the FTC claims would hurt competition for console and subscription-based games. Steve?
Thanks, Lisa. Activision Blizzard stock is up. Shares of Microsoft are down. And Overstock.com is now going to do business as BedBathAndBeyond.com. The change comes following a judge's approval of the bankrupt's brand name, domain, and loyalty program assets this week for more than $21 million. Bed Bath & Beyond was on the brink of bankruptcy, then had a hedge fund step in, only to then go under again. And those are the company stories we're following this hour. I'm Steve Rappaport. This is Bloomberg. Stay tuned for more Bloomberg Markets coming up right after this.
You're listening to Bloomberg Markets with Paul Sweeney on Bloomberg Radio.
All right, taking a look at these markets, the S&P 500, 9 of the 11 sectors are actually higher. Financials leading the way up about 1%. Communication services down about 0.3%. And then obviously moving over and looking at the bond market, the 10-year U.S. Treasury trading around 3.84%. But before we get to more news, let's take a look at in company news with Steve Bloomberg's. Actually, let's get some world and national news from Nathan Hager.
Okay, Jess, thank you. We are waiting for comments here in Washington from President Biden following essentially the end of affirmative action in college admissions. The Supreme Court today sharply limited race as a factor in enrollment decisions in a 6-3 decision written by the Chief Justice, John Roberts. We get more from Bloomberg Law host June Grosso.
Chief Justice John Roberts has said in the past that the way we end racial discrimination is to end racial discrimination by race. So you knew that this was coming.
Bloomberg's June Grosso. Now that it has come, a group tied to former President Donald Trump's re-election campaign says the decision wouldn't have been possible without the 3 justices Trump appointed. Former First Lady Michelle Obama says her heart breaks for any young person out there who's now wondering what the future holds. President Biden will give his own reaction. He's due to give his comments at 12:30 Wall Street time from the White House. We will bring you those remarks live here on Bloomberg Radio. We just learned the French police officer who shot and killed a 17-year-old during a traffic stop outside Paris this week has been handed a preliminary charge of voluntary homicide. This comes after 2 days of violent protest over that teen's killing. The French government's deploying 40,000 officers across the country today to try to restore calm. More than 180 people were arrested last night. A top Russian general has been questioned over the failed Wagner Group mutiny. Sergei Surovikin is known as General Armageddon for his brutal tactics against opposition groups in Syria. A source tells Bloomberg military prosecutors quizzed him over several days about his links to Wagner leader Yevgeny Prigozhin. NATO Secretary General Jens Stoltenberg is watching the aftermath of the rebellion.
The mutiny we saw at the weekend demonstrates that there are cracks and divisions within the Russian system. At the same time, it is important to underline that these are internal Russian matters.
NATO's Jens Stoltenberg spoke on the sidelines of the European Union Leaders Summit in Brussels. Now some news a few blocks away from your location, Paul and Jess. The flagship Tiffany store in Manhattan, we're told it's on fire. The fire department of New York says it got a report of a transformer fire just after 9:30 this morning, Wall Street time. Con Ed, the city utility, has been called to the scene. No injuries have been immediately reported, but of course this is the iconic store made famous in the 1961 Audrey Hepburn classic Breakfast at Tiffany's. It stands next to Trump Tower over at 57th and 5th. The Tiffany's reopened in April after nearly 3 years of renovations. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nathan Hager in Washington. This is Bloomberg. Paul and Jess.
All right, Nathan Hager, thank you so much. We appreciate that. Well, at the beginning of this pandemic, boy, there was people just leaving New York City left and right for good reason, because we were ground zero. Yeah, we also, a lot of us stayed, but a lot of people left, and that's continued. And there's a great story on the Bloomberg terminal that puts some numbers around this. Some 2.2 million people moved to the southeast in just over 2 years. That's roughly the population of Houston, and they took $100 billion of wealth with them down to that part of the world here. And you're talking about anything from kind of North Carolina, South Carolina, all the way to the, the kind of the very tip, or the very, kind of top Jacksonville area. And of course, everybody went down to the Miami area as well.
Below the Mason-Dixon.
But that whole southeast, coastline, just sucked up all these people that were kind of leaving the Northeast, and the numbers are just staggering there.
I know, and just taking a look at that, I mean, what staggering, especially when you're looking at this new South that's argued in this terminal story about $100 billion in wealth migrating, tilting the U.S. economy southward. And, being from the South, maybe I'm a little bit more biased, but talking about North Kentucky to west to Texas is where the businesses are moving to. So not surprising to hear that, being a Texan.
Yeah, it's amazing.
But obviously, we'll have more coming up pretty soon with Bloomberg Markets. Starts right now.
This is Bloomberg Markets with Paul Sweeney.
We got a lot of green on the screen here, but the volume is light. This is a market that's much more optimistic or bullish than maybe the central bankers are. 9.5 million job openings. What are people doing? Are they just sitting in Starbucks all day?
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
What are you guys thinking about hardware, software? How should investors approach this thing called AI?
This is Bloomberg Markets with Paul Sweeney on Bloomberg Radio.
All right, coming up in this hour, we're going to get a breakdown of kind of what we've learned so far with the Supreme Court. A lot of rulings coming down today and tomorrow. So we're going to check in with our expert, June Grasso. She's our legal analyst. She's kind enough to come into our studio and give us a couple minutes here. And then we're going to check with Jonathan Levin, opinion columnist with Bloomberg News, discusses his article on Carnival Cruises and what he thinks and pretends about second quarter earnings. And Brian Egger, he covers all the gaming, lodging, cruises. He's going to join us as well. So we're going to have a nice little roundtable talking about some of the leisure businesses coming up on from an earnings perspective. Let's kick this hour off with a Bloomberg Business Flash from Charlie Pellet.
Hi, thank you very much, Paul Sweeney. Stocks higher across the board. You mentioned those cruise names, though. Carnival Corp down by 1.3%. Royal Caribbean moving lower by 0.6%. Norwegian right now down 0.8%. More on that topic coming up shortly right here on Bloomberg Markets. Stocks higher across the board. NASDAQ 100 index has been fluctuating between gains and losses, but right now back in the green for now, up 2 points. Little change there, up less than 0.1%. NASDAQ 100 index full of those big cap tech names. We've got NASDAQ, the composite index, up 11 now, higher by 0.1%. S&P holding on to a 15-point gain, very close to session highs right now, up 0.4%. The Dow up 228 points. For the Dow, that is a gain of just about 0.7%. This morning, Wall Street got more signs that the Fed's war against inflation is not breaking the economy, or at least not yet. Traders sending Treasury yields soaring amid bets on further rate increases. 10-year 3.84%, with the 2-year that's now yielding 4.87%. Gold little changed, up less than 0.1%, up $1.50 to $19.08. And West Texas Intermediate crude also little change, 69.65 on WTI, up by about 0.1%. Bank stocks for the most part higher today after the biggest lenders all passed the Federal Reserve's annual stress test, clearing a key hurdle toward paying billions of dollars to shareholders. Allison Williams covers the banking industry for Bloomberg Intelligence.
We still have a couple things coming. So Basel III Endgame is certainly one of those, and we think that that, as well as the uncertainty in the economy, which is the other factor, is going to keep the banks a little bit conservative on buybacks. So they have the flexibility. We're probably going to see some good dividend increases, for everyone except for perhaps Citi on Friday.
And Allison was a guest right here on Bloomberg Markets. And, of course, you can hear more of that conversation on the Bloomberg Tapes podcast. You can download it wherever you get your podcast. Bank stocks, as I mentioned, higher for the most part here. J.P. Morgan Chase up 2.9%. Citigroup up 0.2%. Bank of America up 2.3%. Wells Fargo, they're out of San Francisco, rallying now by 3.4%. So again, recapping, green on the screen, equities higher across the board. S&P right now up by 16 points, up 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie. Jess Mitten, Paul Sweeney here in the Bloomberg Interactive Studio. And we have June Grasso with us once again from Bloomberg News. We were just discussing with her about the Supreme Court rejecting the use of race in university admissions. What's the latest update with some of these decisions that have been coming out from the Supreme Court this morning?
I have to say that this is the most important decision of this term and perhaps for several terms, and it harkens back to the reversing of Roe v. Wade. I mean, just as late as 2016, the Supreme Court had affirmed a program at the University of Texas that used racial preferences. But this shows you how the court has changed so much in just 7 years. And basically saying that the admissions programs that use race as a preference violate the Constitution's guarantee of equal protection. And it was a 6-3 decision down ideological lines. Chief Justice Roberts, for 30 years, some say, since he was a government attorney, has been fighting against any kind of race-conscious programs, and he famously said that the way to eliminate racial discrimination is to stop discriminating on the basis of race. And that's basically what his opinion is about. He says you can't use race the way they've been using it, but if you want to put it in an essay about how you've overcome racial, your race in different ways, you can. He said that a benefit to a student who overcame racial discrimination must be tied to that student's courage and determination. Now the question is, how do you do that, and what happens next?
So, have we heard from any of the other sides? I'm thinking about the University of North Carolina, Harvard College. Have we heard any feedback from them or from the dissenting justices?
Well, so the dissenting justices, by the way, and one dissent was written by Justice Sonia Sotomayor, who has senior status on the liberal side, and one written by Justice Jackson. And I'm told that when the Supreme Court justices want to emphasize something, they will actually read part of their dissent from the bench. And Justice Sonia Sotomayor did that, and I understand she ended with, "We shall overcome." There were biting dissents on this about how Jackson said, with let them eat cake obliviousness, the majority pulls the ripcord and announces color blindness for all by legal fiat. So really, and also there was a reaction from a professor at the University of North Carolina who said that they're going to have to look into now how they handle things, and I think there are going to be a lot of lawsuits still from this decision, because the Supreme Court once again announces this big decision but doesn't give guidance on how do universities now implement this decision. How do they do this? So I think you're going to see more.
Is the expectation that this academic, focus on from this case, does that apply to corporate America, to other parts of society, do we think? Or?
This was always affirmative action in colleges and universities was an exception.
Okay.
So it wouldn't apply to corporate America. And what is a little bit odd in the Chief Justice's opinion is he seems to also take out of it the nation's military academies might still be able to consider race in admissions. So where that fits in. But I mean, you have to think that what advocates for affirmative action say is this is the first block to fall, and then next there'll probably be, lawsuits aimed at eliminating affirmative action in businesses as well.
All right, June Grasso, thank you so much. We appreciate it. June Grasso, she's our legal analyst and host of Bloomberg Law, and we'll be talking to June throughout the day and then throughout tomorrow, I think, because we still have some more rulings to come down from the Supreme Court. So again, some big rulings. Roe v. Wade recently, the affirmative action one from today. So some fundamental, court precedent from the last 50, 60, 70 years is now being overturned or
and
reversed.
The potential repercussions from a lot of these rulings. And obviously they're getting these in because the justices are about to go on their summer break. So we're going to have more decisions coming up today and tomorrow.
All right, let's move over to talking about some of these consumer names. I'm thinking these are some of the industries that I love. I'm thinking cruises. I'm thinking gaming, i.e. casinos and all that kind of fun stuff. Hotels, motels. We got a nice round table here. Jonathan Levin, he's an opinion columnist for Bloomberg News. And Brian Egger, he's a senior analyst. He covers all the gaming, lodging, cruising, all the fun stuff. Somehow he's built a career on this. Jonathan, let's start with you. You had a column out today kind of looking at the Carnival results and how the stock traded, but you kind of expanded that out to this may be representative of what we might see during this earnings season. How did you view the Carnival numbers and the market's response?
Yeah, I just thought the reaction was really fascinating because the numbers come out on Monday. Surface level, I thought they were really good, very, very encouraging. But the stock sells off in a big way, and everybody sort of assumes, well, it's, it must have been buy the rumor, sell the news. But the very next day, the stock bounces right back, recovers everything that it lost, and then on Wednesday has another huge day, and so it's now trading well above where it was before the earnings. And I just feel like this quirky series of events is a little bit representative of where we are in this funny market. There's been this big run up in stocks. Not a lot of people tend to trust it a lot. If anybody was sort of fortunate enough to profit from this recent rally, they're kind of saying like, maybe I just got lucky here. Maybe it's time to take some profits. And so I think there's an inclination to sell at the first sign of trouble, or as we say, buy the rumor, but then hurry to sell the news. And as Carnival shows, there's some risk in that knee-jerk reaction.
Brian, I want to bring you into this conversation because whenever we need to know anything about cruise liners, we're obviously going to go to you, Paul and I. When it comes to Carnival in particular, some profit challenges there, but then they still saw a lot of optimism on the bookings. How do you square it away with what they've seen? Obviously, the rebound that we've seen in some of these stocks in that particular corner of the market.
So I see this as kind of like a three-phase recovery, if you will, in terms of what drives sentiment. First, you had recovering from that long suspension, that long pause, with now EBITDA per capacity day yields back to where it was before the pandemic. Next stage right now, we've got bookings and pricing looking really strong, so the consumer is holding up. I think that next test will be, to Jonathan's point, is whether or not they can achieve their long-term goals, which is by 2026, back to double-digit returns on invested capital, increasing their EBITDA per capacity day by 50%. They've laid out some very specific benchmarks by 2026, and I think that will really frame sentiment going forward.
Jonathan, I got to ask, are you a cruiser?
So I'll tell you, I went on my very first cruise, at least as an adult, when it was the first Royal Caribbean cruise back after the pandemic, and nice. I did it as a Bloomberg journalist.
I see what you're saying. Okay, you kind of. All right. So Jonathan, this when you think about kind of how these stocks are trading, because this is going to be an important earnings season, is what we're hearing from a lot of strategists here. But boy, you get some economic data today that says the economy is pretty strong. What do you think corporate America needs to do during this earnings season to kind of just keep moving forward here? Because as you mentioned in your column here with Carnival, it was all over the place.
Yeah, I mean, so obviously, the trouble here is the bar is very high. So, traders, analysts are going to struggle to answer the question, like, how good is good enough with pricing being as strong as it is today? And so you just look at like what the sell side strategists have been saying for the market as a whole. Most of them had their year-end 2023 targets around 4,100. So as we're trading above 4,300 here, you say to yourself, you're going to have to do a little bit better than good to keep up this momentum. Is it possible? I think maybe. I mean, the macro data has been really nothing short of phenomenal, you have to say. If you look over at that Bloomberg Economic Surprise Index, it's the highest it's been in quite some time. A lot of upside surprises on the macro, and we may just see that filter down to companies' bottom lines.
Brian, what about some of Carnival's rivals? When you're thinking about Norwegian, Royal Caribbean, how do they fare right now?
I mean, also quite strong. I think across the wide swath of consumer, leisure, casinos, hotels, and cruise lines, the leisure consumer of entertainment has really been quite resilient, and that remains the case. Now, whether or not that will remain the case, if we have a more significant economic downturn, that will be a test, but we really are doing so when the cruises, you do have the benefit of relatively moderate supply growth, fuel efficiencies to offset some of the rise in fuel costs, and some real strategic redeployment, and in the case of Carnival, just a big deleveraging program. So that's really what helps them with wind in their sails.
All right, I can't let you go here without talking about the gaming business. How are things, number one, on the Strip in Vegas, and number two, in Macau?
Yeah, that was a nice pivot to casinos. Overall, quite strong. I mean, Macau has suffered because of the long-standing travel restrictions and the ban on VIP junket credit, but the mass business is beginning to come back. Vegas looks quite strong. I mean, the good news there is not only do you have the leisure element, but you also have, unlike cruise lines, the business element. Yep. And conventions seem to be back at full force.
Blair, what do you think the risk is to this market here as we kind of come into earnings here? I mean, you know, the S&P 500 is at $220 a share roughly for 2023. Some folks will come into this studio and say, hey, $200 is not off the table, maybe even sub $200 in earnings. There's an earnings risk here. What do you hear? Jonathan.
Oh yeah.
Sorry,
so
Jonathan.
What is the earnings risk? I mean, coming into 2023, I got to say I was certainly in the camp of if we think we're going into a recession, $220 seems awfully rich. But all of the economic data that we've gotten recently suggests to me that if we're going into a downturn, it's just not happening next month. It's not happening probably 3 months from now. We've seen the professional economists, the professional forecasting community sort of steadily bump back their recession calls. A lot of people thought it would start in 3Q. Now most people see sort of flat growth in 3Q, bumping back any recession calls to 4Q. So, all of that, I think, trickles right down to companies' bottom lines. If the macro economy is holding up, and we know people are going on cruise ships, it's hard to believe that, we're in for some massive downside surprise this quarter or even next quarter.
And Brian, obviously, what does that tell us about the consumer if they're still willing to spend money on all of this?
Yeah, the consumer is hanging in there. I mean, what we see for Carnival, at least now, are that bookings for the second quarter are 17% above where they were in 2019.
Wow.
We see ticket prices really quite strong, and we see a nice backlog of customer deposits, people paying for cruises in advance. The key thing for them is, can they hold up? Can ticket price and yield growth continue to outpace inflation in things like port charges, travel expenses, advertising costs? As long as they can maintain that balance and generate incremental cash flow per unit of capacity, this can continue, but obviously we're going to keep a close watch on the economy.
Right, so that's going to be really important to keep our eyes on. So I'm really glad that both of you were able to join us. Brian Egger, Senior Gaming and Logging Analyst at Bloomberg Intelligence, who was just speaking with us as well. And so that's going to be really important, Paul, when we're taking a look at all of this. Also, we had Jonathan Levin, who's an opinion columnist with Bloomberg News, discussing Carnival too. And just looking at what's happening with the S&P 500, casino and gaming sub-industry group in the S&P 500, you're looking at that up about 1% today. But overall this year, it's actually up 23%. Nice. So huge gains there, Paul, when you're looking at some of these casino and gaming stocks. We'll have more coming up. This is Bloomberg. Now let's get some company news with Bloomberg's Steve Rappaport.
Hi, there's still time for UPS and the Teamsters to reach an agreement on a new contract, but Bloomberg's Jeff Bellinger reports union leaders are turning up the rhetorical heat.
Steve, United Parcel Service's current contract with the Teamsters Union runs through the end of next month, but the union has held practice picketing sessions in preparation for a possible strike, and union leaders say a walkout by 330,000 truck drivers and other UPS workers is imminent after they walked away from the bargaining table, accusing UPS management of asking for concessions on health, welfare, and pensions. UPS has already agreed to some union proposals and says it has presented a significantly amended proposal that addresses some key union demands. Steve?
Thanks, Jeff. Currently, shares of UPS are down less than 0.25%. It just got harder to use someone else's Costco card. Following Netflix's lead, the warehouse chain is cracking down on account sharing and said it will be checking membership cards to ensure the photo matches the person at the checkout line. Though Costco has always asked customers to show membership cards at the register, the retailer says it has seen more non-members shopping with people's cards at self-checkout. Expands. If membership cards do not have a photo, customers will be asked to present one per photo ID. Shares right now of Costco currently down less than 0.25%. And there's a new way to dash for the cash. DoorDash says it will offer delivery workers an hourly wage option. The food delivery service workers known as Dashers can choose between a guaranteed minimum rate for time spent on a delivery or earning per job they take. I'm Steve Rappaport. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:21 on Wall Street. We do check markets all day long at Bloomberg. We've got the Dow, the S&P, NASDAQ up barely. Let's begin there. Higher by 1 point right now. Little change. NASDAQ 100 index full of big tech names now in the red. 16-point drop right now for the NASDAQ 100 index, down by about 0.1%. Really, the outperformer today, small cap shares. Look at the Russell 2000, up now by roughly 1%. Russell 2000 higher by 21 points. 10-year yield 3.85%. We've got the 2-year 4.88%. Wall Street did get more signs this morning that the Fed's war against inflation is not breaking the economy, with traders sending Treasury yields soaring amid bets on further rate hikes. Again, that 2-year worth repeating 4.87% with the 2-year, 3.85%. Spot gold 19.08 the ounce, up by about 0.1%, higher by $1.75. And West Texas Intermediate crude oil up 0.3%, 69.73 for a barrel of West Texas Intermediate crude. Again, recapping, we've got the NASDAQ 100 index lower now by just about 0.1%. The Dow, the S&P, NASDAQ, they're all advancing. S&P right now up by about 0.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you. Jess Mitten. Paul Sweeney here in the Bloomberg Interactive Brokers studio. Up next, I want to get straight to our next guest, Nancy Curtin, partner, global CIO, and head of investment advisory at Altman Tiedemann Global. And Nancy, thank you so much for joining us. We did get an update on the first quarter GDP numbers being upwardly revised, driven by strength in consumer spending. What's your take when you're looking at the trajectory of the U.S. economy versus what we're seeing globally?
Look, the U.S. has been a lot stronger than expectations. This is something that we expected as we entered the year. But the recent number that came out this morning, which is, of course, the third revision of the first quarter GDP in the United States, was super strong, right? Came in revised up 2%. But the real surprise there was the consumer is alive and well. There's no recession going on with the consumer in the first quarter. Consumption was up 4.2% versus 1% in the fourth quarter of last year. And we see signs that this consumer resilience is continuing into the second quarter, which we expect to be pretty decent here. And so I think one of the surprises of this year, which is always why markets climb that proverbial wall of worry, is that GDP has been stronger than expected, not just in the United States, but actually globally. And in particular, it's been the consumer that has added to that strength.
So globally, Nancy, where are you guys finding, I guess, the most opportunity these days? Maybe geographically, by asset class? Where are you spending most of your time these days?
So, you know, we reduced our exposure to the United States last year, so we would have a globally diversified portfolio. And I think that's proven to give us both diversification benefits and also return as well. So we all know that the U.S. market is up 14%, NASDAQ's up 30%. Okay, very strong. And we can come back and talk about some of the reasons. But I think less well known maybe, or U.S. investors not focusing on it, is Euro stocks is up close to 17%. Japan in local currencies up 27%. So leaning into the rest of the world has actually been a fruitful strategy. And it's mean that we've diversified some of that concentration risk in the United States. So we like the rest of the world. We want to have a globally diversified portfolio. And more recently, within the United States, I would say more recently, we've moved to a slight overweight, which is going to sound a bit controversial. And given some of the news of the Fed and ongoing tightening, I'd say we're constructively optimistic or cautiously optimistic, which is to say we're leaning into those areas of underperformance, mid-cap and value, which are trading at multi-decade lows versus their traditional metrics and multi-decade lows versus large cap as well. So we think the market breadth will improve in the United States. So we still like the U.S. market, but also we have exposure to rest of world, which is done pretty nicely here as well.
So more optimistic, Nancy, when it comes to this market breadth debate that a lot of people have been having. What about when it comes to small caps? You brought up mid caps. What about small caps?
We just think the mid-cap index has more quality companies with lower levels of leverage than small cap. But I would make the same argument. Small cap is pretty attractively valued. Small cap, mid-cap value. These are all the sectors that have been ignored by investors as they focused on generative AI and, of course, the tech sector, which has driven the rallies so far year to date. But we just think there's more of a quality bias to the mid-cap. We also see a long-term secular theme in mid-cap, which is the onshoring of supply chains, bringing manufacturing back home again, and also companies' focus on automation. CapEx was up about 4% in the first half of this year, and we think these are tailwinds for the mid-cap sector, which, as I said, trades at very, very attractive valuations versus its own history and versus large caps as well.
Nancy, I know during your career you've amassed a lot of experience in alternative assets. How do alternatives fit into your outlook these days?
So our client base is ultra high net worth and therefore and foundations as well. And so they have a longer term time horizon. So when I talk about alternatives, I think it's really appropriate for our client base, as I said, that has amassed perhaps more wealth and a long term time horizon, et cetera, because many of these alternatives come, we think, with enhanced return and interesting return characteristics, but also with a degree of illiquidity. So they need to be appropriate, obviously, to client circumstance. Okay, so what do we like in alternatives? We think it's very interesting time for private credit. It's one of the things we'll be initiating, reducing some of our exposure to the shorter end, where we've made very nice money. Thank you very much. Yields have risen, et cetera. But we think we can get double that in private credit. We like real estate, particularly what we're going to call long hold real estate, which we think for U.S. taxpayers can bring some very interesting tax benefits, but also benefits from the supply-demand imbalance in areas like residential real estate with good tax benefits, good inflation protection. And then we like private equity as well, exposure to buyout managers, growth, and venture. We think, by the way, the generative AI, many of what I'll call the killer apps, probably still to come, are either on the drawing board or in many of the private sector today in growth and venture portfolios. And so we like this complement of being able to play clearly technology in public markets, but also the digitalization, climate imperative, decarbonization technologies. Lots of tailwinds, we think, also happening in private markets as well.
Hey, Nancy, what are some of the top questions you're getting from clients at this point when you do have this ongoing sort of divergence where people were trying to telegraph a recession coming, but then you have a lot of this economic data, especially the GDP data this morning, saying the contrary to that?
So we have said from the very beginning of the year that we want to remain invested. Staying invested is hugely important. It means, I think most people didn't see this rally, at least to the extent of this rally. And so we've remained invested. We haven't tried to time markets, super important. But we've also said we thought that 2023 would be a better year for risk assets. And we said that because, look, back-to-back declines in both bonds and stock markets, super unusual, happens about 2% of the time in over 100 years. We also said that, the third / going into fourth year of a presidential cycle tends to be good, particularly for U.S. risk assets. But finally, we've begun the year by saying investors are super cautious. Everyone was cautiously positioned bearish, got even more bearish, obviously, after the banking stresses. And what we said to clients, look, on any good news, we think these markets could rally here. And of course, we've had a lot of good news, right? Growth has been better than expected. Q1 earnings better than expected. Obviously, this transformational technology in the form of generative AI, super interesting. Again, maybe the valuations on certain stocks have risen too much, again, but we think it has very, very significant long-term implications. And then we got through that crazy debt deal in the States without too much fiscal drag and pushed out the whole discussion to 2025 to talk about again. So there's been a lot of good news here. And we said to investors, markets climb a proverbial wall of worry, and we've had a lot of good news. And actually, we think we could have some good news looking forward ahead, but I'll hang on to that one.
All right, Nancy, just real quick, we heard from, again, more inflation concerns in the UK. How does that, you got about 30 seconds, how does it impact kind of your view of the UK here?
UK, I'm going to put in the special child department. UK has some issues related to Brexit, the composition of the stock market, very, very energy intensive, banking intensive, and it's had very, very sticky inflation. We think that, the UK could continue to raise rates, probably likely to go into a deeper recession. That is not our view about Europe, United States, and Japan, by the way. So we have a more, constructively optimistic view in those other markets. UK special child. Let me put it that way.
That's right. Okay, that's what we heard from some others as well. Nancy Curtin, thank you so much for joining us. Nancy Curtin, she's a partner, global CIO, and head of investment advisory at Alti Tiedemann Global. Interesting take there on a global view, generally positive on kind of the macro call, positive on taking some risk, including not just traditional assets, but also alternative assets. A little bit of concern there about the UK.
And also more optimistic when it comes to the argument about market breadth and what she's seeing as far as improvement here in the mid-cap space, but a little bit contrary to when everybody's kind of arguing about what we've been seeing with the cohort of these sort of magnificent 7 technology stocks leading the charge this year, Paul.
Yep, absolutely. I'm looking at the Russell 2000 right here, up 1.2% today. So that gets your attention. You like to see a little bit of that broadening out of the breadth, and you're starting to see it there in the Russell. So that might be a good positive thing for this market. Right now, let's head down to Washington, D.C. World and national news with Nathan Hager.
Paul Sweeney, Harvard University says diversity and difference are essential to academic excellence. That's after the Supreme Court effectively banned colleges and universities from factoring race into admissions decisions in a 6-3 ruling written by Chief Justice John Roberts, which upends decades of precedent when it comes to affirmative action on college campuses. Bloomberg's Anne-Marie Horden reports that majority decision drew a sharp dissent read from the bench by Justice Sonia Sotomayor.
Court cements a superficial rule of color blindness as a constitutional principle in an endemically segregated society where race has always mattered and continues to matter.
Bloomberg's Anne-Marie Horden quoting that dissent from Justice Sotomayor. We are waiting for comments from President Biden to get his reaction to the Supreme Court ruling. He is set to speak any moment now from the White House. When he steps to the lectern, we will bring you those comments live here on Bloomberg Radio. The U.S. is close to approving a long-range missile system that could turn the tide for Ukraine in its fight against Russia. This is according to the Wall Street Journal, which says Ukrainian officials are hopeful the Biden administration will sign off on the Army Tactical Missile System, also known as ATACMS. Its 190-mile range could strike Russian targets far behind the front lines. The Journal report says President Biden hasn't made a final decision yet, but it comes as European Union leaders meet in Brussels. We spoke with Ukraine's ambassador to the U.S., Oksana Markarova.
The ask remains the same: more weapons, more support to Ukraine, more sanctions for Russia. And of course, we will be also discussing our path to European Union, and which, again, we're implementing all the reforms in very difficult areas, including the justice reforms and others, in order to faster become member of the European Union.
Ukrainian Ambassador Oksana Markarova spoke with Bloomberg from Washington. And an update on the reported fire at the iconic Tiffany's store in Midtown Manhattan near Trump Tower. Tiffany says that basement fire is now out. We reported moments ago that the fire department of New York got the report of a transformer fire just after 9:30 this morning. Tiffany's parent company, LVMH, says it expects that store, made famous in the 1961 film Breakfast at Tiffany's, to reopen later today. Global news, 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nathan Hager in Washington. This is Bloomberg. Paul and Jess.
Thank you, Nathan. We appreciate it. Jess Minton, Paul Sweeney here in the Bloomberg Interactive Brokers studio. And up next, we have Stacey Stevenson, the CEO of Family Equality, joining us to talk about the latest here when it comes to as far as what this could mean when we're looking at companies, especially being less vocal when it comes to Pride Month during this anti-LGBTQ outcry right now. But Stacey, I wanted to start off first with you as far as your take here when we're looking at some of these Supreme Court rulings that are coming out.
Yeah, first, thanks for having me. You know, when I think about the affirmative action case that just came down, the first thing that came to mind for me is that this is hate wrapped in legalese. And so this Supreme Court overturning yet another long-standing precedent is devastating and it's worrisome. And, this is just yet another concerning Supreme Court decision at a time when LGBTQ plus folks and marginalized folks are under attack in this country. It's very worrisome.
How concerned are you, Stacey, that this ruling will not just affect academia, but will go permeate through other parts of society, whether it's the workplace or other areas as well?
I'm extremely concerned about that. Right? This has set a precedent, and much like when Roe was overturned, we saw that too. So this could certainly start permeating and expanding, not in just academia, but start to seep into corporate America, started to seep in other sectors, and that's very concerning. One thing I will say is that we are not going to retreat, and our partners who are working in academia will continue to fight. And on the LGBTQ plus side, obviously we're watching this very closely, but one thing that I think is very important is that we will not retreat. We have to continue to fight. And at the same time, be realistic about this could start to seep into other sectors, decisions like this.
Stacey, talk to us more about family equality and what you do there.
Sure. Family is foundational to America, to American values. And every person in this country deserves the right to family. However, that is not the experience of many LGBTQ plus people who want to create a family, who want to sustain a family, who want to have children. That is the work of family equality. For 44 years, we have been fighting for LGBTQ plus people to find, to form, and sustain our families. And what we do is essentially ensure that we can create our families without social, without legal, and without economic barriers. And we've been doing that work since 1979.
How do you do that? Because it seems like today may be tougher than it's ever been, particularly in certain parts of the country, certain states. Give us a practical case of how you actually try to do that.
Sure. A practical case would be, for example, we know that we are seeing just a plethora of LGBTQ plus rhetoric and laws being introduced or passed in the state of Florida, for example. One of the strategies that we employed is that we, along with some other plaintiffs, are now taking the state of Florida or the Department of Florida of Education to court over their Don't Say Gay bill, their Don't Say Gay law, because it's frankly unconstitutional. And so when we can actually enter into lawsuits and to conversations like that, that not only signals to families in Florida that we are there for them, but it also helps to move the needle. Like, we're going to have to get really aggressive now. And we have, over 500 anti-LGBTQ plus bills that have been introduced across the country. Those strategies have changed. I think 2018, we only saw 41 bills. Now we're up to 500. They've changed their strategy, so now we have to change our strategy. But a practical example would be our lawsuit in Florida.
And talk to us more about these inclusive hiring efforts that are really helped to be directed toward families. And obviously, when we've seen larger corporations, we've heard about Target obviously having those particular backlash recently, and basically just looking at as far as what this means for hiring, recruiting, and some of the repercussions this could have there.
You want inclusive policies, you want to hire people who are from marginalized communities, yet we see organizations who are retreating, if you will, or understanding that there's no more what I call a middle ground. I feel like there used to be a middle ground where corporate America could sort of satisfy both sides. That middle ground does not exist anymore. And what I see is going to be a shrinking pipeline of individuals who would, I feel, be comfortable with applying for places like Target and others. I think those folks are going to think twice before working at organizations like this. So now we've caused another issue, right? By retreating, now we effectively have shrunk the pipeline in terms of those organizations, or those people rather, who would otherwise be hired or even see these organizations as a viable place to work.
So, Stacey, what's your take on what we saw or what we are seeing between Disney and the state of Florida?
I can't necessarily speak to that, but what I will say is that Disney,
I guess, just representative of corporate America. There's a company who tried to step up and, obviously felt some backlash, and that's Almighty Disney. That's Mickey Mouse.
That's Mickey Mouse. But what I will say is that about Disney and others is that I feel like there's an evolution that is happening with corporations, and so we know that Disney had some backlash. They retreated. There was a whole plethora of negatives that came out of that, and then we saw Disney take a shift. And I think that's exactly what's going to happen, is that these organizations, oftentimes thinking about revenue, thinking about, I think, trying to please everybody, will oftentimes retreat. But if they are really connected to their values, if they really are walking the walk and talking the talk, then we will see that shift. And I'm hoping that we will see that with other organizations, because you're going to have to make a decision. And I often say that either you are for equality or you're not, and you can't take a middle ground.
Stacey, thanks so much for joining us. Really appreciate getting a few minutes of your time. Stacey Stevenson, CEO of Family Equality. Right now, let's get a little bit of a reset here. Let's go over to Charlie Pellet for Bloomberg Business Flash.
Thank you very much. And here's what's going on, Paul Sweeney. We have got the Dow, the S&P, NASDAQ, all advancing right now. 18-point gain in the S&P, up by about 0.4%. We've got the Dow up 271. That is a gain of 0.8%. NASDAQ up 7, higher by about 0.1%. And of course, we will be hearing from President Biden on today's Supreme Court ruling coming up in just a moment right here on Bloomberg. Treasury yields surge. We've got the 10-year now at 3.84%, with the 2-year 4.87%. Spot gold up $1.78 the ounce to $19.09. That is a gain of 0.1%. And West Texas Intermediate crude flat on the day now at $69.55 a barrel. Bank stocks are advancing after the biggest lenders all passed the Federal Reserve's annual stress test. But what about those regional banks? The focus of a lot of attention back in March. Herman Chan covers the regionals for Bloomberg Intelligence.
So you would expect higher capital requirements. You would expect higher liquidity requirements. And so this is the stress test was really just the first step in a series of tougher capital rules that are coming down the pike for the regionals.
And Herman was a guest right here on Bloomberg Markets. You can hear more of that conversation on the Bloomberg Tapes podcast. You can download it wherever you get your podcasts. Among regional bank names today, PacWest Bancorp up by 2.7%. Again, recapping, we do have stocks pushing higher. S&P up now by 19, up 0.5%. The 2-year worth repeating at 4.87%. The 10-year 3.85%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Of course, one of the big news items of the day, Supreme Court rulings continue to come down today. Today, one of the more notable ones, Supreme Court rejects use of race in university admissions. We're expecting comments from President Biden in just moments, and when he does make those comments, we will go to them directly. But first, we want to bring in Ryan Teague Beckwith, White House and political reporter for Bloomberg News. He's down in Washington, D.C. Brian, what do you expect to hear from President Biden? What do you expect to hear from this administration regarding the Supreme Court case?
I mean, I think it's very clear he's going to come out and give a full-throated defense of the notion of affirmative action, vow to defend it in circumstances that haven't yet been overruled by the Supreme Court, and use this as an opportunity to criticize the conservative majority in the Supreme Court for what he will term as overstepping its bounds.
And what have we heard from the Biden administration leading up to this? Have we heard anything as specific comments about what they think?
Yeah, I mean, I think everyone has had a sense that this was how this was going to come out. This has been pretty clear that this was going to be one of their goals. And they've made these statements before that the Biden administration values affirmative action, considers it a worthy goal, and that they are not going to be happy with this decision.
Is this going to be I mean, how much do you think President Biden and the administration will get out in front of this issue? I mean, we got a presidential election year coming up, so the Supreme Court could in fact be an issue. Do we have any sense of how aggressive the administration wants to be here as it relates to some of these rulings?
I think that this is probably more like they will use this as an example of things where they think the court is, overstepping, and that they will serve as a valuable check on the court. Affirmative action itself is much more, the public is much more ambivalent about this. Keep in mind that even as Joe Biden was winning California by double digits, a ballot initiative in 2020 that was in favor of restoring affirmative action in the state failed by a large margin. So this is not like a uniformly political winner, I think, among the voting public. It doesn't rank high in their concerns, but I think among the Democrats and Democratic-leaning voters who are concerned about things like the Dobbs decision or concerned about the court more generally, this will be sort of like another piece of evidence for them. So I think that you'll hear him talk about it. I don't think that you'll hear him make it like the tip of the spear on his reelection.
And Ryan, this ruling could mean fewer Black and Hispanic students at the country's top universities and force hundreds of schools to revamp these admission policies. Do we have a scope of what the repercussions could be yet?
You know, the problem with the decision in terms of predicting things like that is that it does not establish like a very clear, like, this is what you can do and this is what you can't do. It basically says the way that you're doing it right now is not okay. But in the very last, sort of penultimate sentence of the decision, Chief Justice John Roberts says that, a college could, however, read like an admission essay in which a student says that through their sort of grit and determination, they overcame, racial discrimination, and that makes them a worthy addition to the university, and that they could take that into consideration. So not the student's race per se, but the fact that their race caused them to face discrimination and that they overcame that discrimination could be a factor. So really, I mean, I think that the number one winner from this decision are those firms that like help students write college admission essays, because you'll want to write it just so to make sure that you are sending that message. I think it's going to be a big headache for administrators who may have, kind of informally used a checklist to say like, oh, okay, this essay mentions this and, let's keep track of that. This calls for a much more individualized thing. I think that the elite institutions like Harvard, if they want to spend more time and money parsing the applications of students in order to maintain a diverse student body, probably have the resources to do that. I think you might feel the effect more at the smaller colleges that don't have as many resources and may have used more shortcuts, where they may be looking at those and saying, okay, that's probably not allowed under the current thing. The other beneficiaries of this, of course, would be lawyers who file these kinds of cases, because this just opened up like a whole avenue of discussion.
All right, Ryan, thanks so much for joining us. Ryan Teague Beckwith from Bloomberg News. Right now, let's go to Washington, D.C. President Biden is at the podium.
In case after case, including recently, just as a few years ago in 2016, the court has affirmed and reaffirmed this view that colleges could use race not as a determinative factor for admission, but as one of the factors among many in deciding who to admit from a already qualified pool of applicants. Today, the court once again walked away from decades of precedent and as the dissent has made clear. The dissent states in today's decision, quote, rolls back decades of precedent and momentous progress, end of quote. I agree with that statement from the dissent. The court has effectively ended affirmative action in college admissions, and I strongly disagree with the court's decision. Because affirmative action is so misunderstood, I want to be clear, make sure everybody's clear about what the law has been and what it has not been until today. Many people wrongly believe that affirmative action allows unqualified students to be admitted ahead of qualified students. This is not how college admissions work. Rather, colleges set out standards for admission, and every student has to meet those standards. Then and only then, after first meeting the qualifications required by the school, do colleges look at other factors in addition to their grades, such as race. The way it works in practice is this. Colleges first establish a qualified pool of candidates based on meeting certain grade, test scores, and other criteria. Then and only then, it is from this pool of applicants, all of whom have already met the school standards, that the class is chosen after weighing a wide range of factors, among them being race. You know, I've always believed that one of the greatest strengths of America, you're tired of hearing me say it, is our diversity, but I believe that. If you have any doubt about this, just look at the United States military. The finest fighting force in the history of the world. It's been a model of diversity, and has not only made our nation better, stronger, but safer. I believe the same is true for our schools. I've always believed that the promise of America is big enough for everyone to succeed, and that every generation of Americans, we have benefited by opening the doors of opportunity just a little bit wider to include those who've been left behind. I believe our colleges are stronger when they're racially diverse. Our nation is stronger because we are tapping into the full range of talent in this nation. I also believe that while talent, creativity, and hard work are everywhere across this country, not equal opportunity. It is not everywhere across this country. We cannot let this decision be the last word. I want to emphasize, we cannot let this decision be the last word. While the court can render a decision, it cannot change what America stands for. America is an idea unique in the world, an idea of hope and opportunity, of possibilities, of giving everyone a fair shot, of leaving no one behind. We've never fully lived up to it, but we've never walked away from it either. We will not walk away from it now. We should never allow the country to walk away from the dream upon which it was founded. That opportunity is for everyone, not just a few. We need a new path forward, a path consistent with the law that protects diversity and expands opportunity. So today I want to offer some guidance to our nation's colleges as they review their admission systems after today's decision. Guidance that is consistent with today's decision. They should not abandon, let me say this again, they should not abandon their commitment to ensure student bodies of diverse backgrounds and experience that reflect all of America. What I propose for consideration is a new standard, where colleges take into account the adversity a student has overcome when selecting among qualified applicants. Let's be clear, under this new standard, just as was true under the earlier standard, students first have to be qualified applicants. They need the GPA and test scores to meet the school's standards. Once that test is met, then adversity should be considered, including students' lack of financial means, because we know too few students of low-income families, whether in big cities or rural communities, are getting an opportunity to go to college. When a poor kid, maybe the first in their family to go to college, gets the same grades and test scores as a wealthy kid, whose whole family's gone to the most elite colleges in the country and whose path has been a lot easier. Well, the kid who faced tougher challenges has demonstrated more grit, more determination, and that should be a factor that colleges should take into account in admissions, and many still do. It also means examining where the student grew up and went to high school. It means understanding the particular hardships that each individual student has faced in life, including racial discrimination that individuals have faced in their own lives. The court says, quote, nothing in this opinion should be construed as prohibiting universities from considering an application's discussion of how race has affected his or her life, but be it through discrimination or inspiration or otherwise, end of quote. Because the truth is, we all know it, discrimination still exists in America. Discrimination still exists in America. Discrimination still exists in America. Today's decision does not change that. It's a simple fact. If a student had to overcome adversity on their path to education, the college should recognize and value that. Our nation's colleges and universities should be engines of expanding opportunity through upward mobility. But today, too often, that's not the case. The statistics, one statistic, students from the top 1% of family incomes in America are 77 times more likely to get into elite college than one from the bottom 20% of family incomes. 77% greater opportunity. Today, for too many schools, the only people who benefit from the system are the wealthy and the well-connected. The odds have been stacked against working people for much too long. We need a higher education system that works for everyone, from Appalachia to Atlanta and to far beyond. We can and must do better, and we will. Today, I'm directing the Department of Education to analyze what practices help build a more inclusive and diverse student bodies and what practices hold that back. Practices like legacy admissions and other systems that expand privilege instead of opportunity. Colleges and universities should continue their commitment to support, retain, and graduate diverse students and classes. And companies who are already realizing the value of diversity should not use this decision as an excuse to turn away from diversity either. We can't go backwards. You know, I know today's court decision is a severe disappointment to so many people, including me, but we cannot let the decision be a permanent setback for the country. We need to keep an open door of opportunities. We need to remember that diversity is our strength. We have to find a way forward. We need to remember that the promise of America is big enough for everyone to succeed. You know, that's the work of my administration, and I'm always going to fight for that. And I want to thank you all. And I know you've been told I have a helicopter out there waiting to go up to do an interview in New York. I'll be talking more about this, a live interview. But thank you very much, and we're going to have plenty of time to talk about this. But we're not going to let this break us. Thank you.
President Biden, the Congressional Black Caucus said the Supreme Court has thrown into question its own legitimacy. Is this a rogue court?
This is not a normal court.
Should there be term limits for the justices, sir?
All right, that was President Biden giving some comments in the response to the Supreme Court decision. The Supreme Court effectively barred universities from using race as a factor in university admissions, marking the start of a new era in higher education, rolling back decades of precedent. So President Biden coming out strongly against that ruling, saying that, again, it turns back decades of precedents and, you know, definitely not supporting the ruling there, and saying, but, you know, from his perspective, the story is not over. So
right, didn't mince his words whatsoever, and talking about how affirmative action decision cannot be the last word here when he was discussing this decision, Paul.
Yeah, it's interesting. So it'll be interesting to see how this plays out, how it parses out. As June Grasso, our legal reporter, was reporting earlier, you know, you really have to dig into the weeds here and see what is really allowed and what is not allowed. And if it's not spelled out, what do these universities do? And maybe to the extent that they want to preserve some diversity in their communities, are there some, you know, quote unquote workarounds they can apply to try to preserve some diversity here? But clearly a major ruling handed down by the Supreme Court today, and this has been a Supreme Court that's had you know, a number of major rulings, Roe v. Wade amongst others, and now this one. We still have some more rulings that are scheduled to come out tomorrow,
before they go on their summer break.
Yes.
So voting on this 6-3 along the ideological lines for when it comes to this, and the justice saying that the programs at Harvard College and the University of North Carolina violated the Constitution's Equal Protection Clause, and that's how that ruling came down.
Yeah, so it'll be, I say, if you're in the university admissions departments now, you're scrambling. Right. You're probably meeting with, you know, your counsel here to figure out, you know, what do we do, what can we do, what should we do, and this is going to spark, you know, a wide range of discussion, I would think, within academia to figure out, you know, where do we want to go from here, and to what extent does today's ruling really change the way we construct our incoming classes? Because, you know, we know universities and colleges, you know, really work hard to, again, create a relatively diverse incoming class, diversity not just based on race, but a whole number of
the repercussions that can happen.
And the repercussions. All right, so fantastic reporting today from our Bloomberg team, led by June Grasso, on the Supreme Court. Sound On with Joe Matthew. That starts right now.
Unexpected, to be sure, but it does raise a lot of questions here about some of the diversity and inclusion initiatives, not just in the nation's universities, but potentially in corporate America as well. Let's bring in Bloomberg Money and Politics reporter Laura Davidson, who is in our Washington bureau as well, to talk a little bit more about this. Laura, there could be some wide-ranging implications for this beyond just whether or not you want to get your kid into Harvard.
Yeah, we're really seeing a big divide on these cultural issues going forward, and really kind of the stakes have been different for Republicans and Democrats than they have in past races. You know, we've really seen Republicans break with big businesses going forward. You've seen here that they're almost, you know, kind of in a different way siding with these large universities. So you're seeing kind of these fault lines shift, which is really playing out on the presidential campaign very, very distinctly here. If you see, you know, DeSantis going after Disney,
going after PayPal. We've seen Trump time and time again go after companies like GM and Ford and Amazon and others. And so this is really a different Republican Party. In the past, the Chamber of Commerce and Republicans were very lockstep. Going forward, this is a different. You see these fault lines coming up, and things like tax cuts are not as much the focus of the Republican Party.
Yeah, absolutely. There's a tension now between the Republican Party and corporate America and companies in particular. What does this tension do, Laura, to donations? How's it affecting the money flow to campaigns?
You really, this will remain to be seen. We haven't seen the big numbers yet come in for this cycle, but a lot of corporations are thinking differently about how they give and who they give to. We saw this initial break back in after January 6th in 2021, where some corporations said, look, we're not going to give any money to election deniers. You've seen some corporations come